Hey, thanks for tuning in. This is a weekend review for the week ending 12/10/2021. We're looking at a chart of the S&P 500. This is a weekly chart. Each one of these candles represents the entire trading week. Of note, we are back above the high of the previous week, 466.56, closed 470.74. So for those that understand that there's only really about three things that can happen coming into this past week, we could have closed lower, we could have closed inside, closed higher, or gone lower and higher, an outside bar. And in this case, you got the best case scenario for the bulls. They opened inside and closed above the previous high. So that targets this high here of 473.54. Let's zoom into the daily to give the structure. This is a textbook bottoming pattern that we had back in October. And from that bottoming pattern, we have what looks like a pretty clear 5-wave move. A pretty clear wave 2. Little zigzag ABC, 50% retrace of that move. And now what appears to be an impulse move higher, right? This little fractal we see all the time, over and over and over, this same 8-wave pattern, 5 up, 3 down, 5 up, 3 down. And yeah, we've got the divergence, we've got the histogram above the zero line, the PPO reset to 0, we've got the bull cross. I mean, this is telling me you should not be selling your longs in SPY. That's what it's telling me. If you look at QQQ, you're getting a very similar story. It's almost identical. This little pattern here is not the same. No inverse head and shoulders, really just broke through the downtrend on volume. Look at the PPO showing you really the difference between basically your 10 and 20. It's your 12 and 26 for this example. But you can see it here in the moving averages as well. So yeah, everything you need to see here in the Qs. Bull flag setting up, could go sideways for OPEX. Don't buy weekly options and it won't be a problem. As you can see, ascending channel, everything looks fine. Nothing to panic about. Dips continue to get bought. I will say this does look like distribution, right? All the big candles here are red, even back here. And if you look at how long this has been going on for, this does look a bit excessive. Just going back to the 2015 low, but really even the 2020 low. I mean, you're talking about 150% in less than 2 years on an ETF. If that doesn't get you to drop your jaw, I don't know what will. Yeah. What I'm looking for is really a pullback to the bottom of the channel, which hasn't happened since November of last year when I did buy and had a nice position. I liquidated most of this back here at the 360s. And since, we haven't got too much further, but I am, if she does break north of this channel, she could certainly run another 20%. But the reality is dips into the orange and green line are for buying. It's that simple. Don't overcomplicate this. Don't ask, is there some major top? Right? Maybe there is. Maybe there is. But it's unlikely. And from what I can see here, right, why can't we just do this? Why can't this just be a big bull flag, right? Take away all the counts. All this stuff just confuses people, right? Why can't this just be a big flag? Something like this. And then eventually we're going to do something like that to get us back up here at 430. Why can't that happen? Of course that can happen. That's probably what's gonna happen. We'll keep going through. SMH, I don't like nearly as much as the Qs. This one looks really extended and kind of already had its move. That being said, still above a 20. That's rising. This isn't a problem. And every time she closes below, the dip is instantly bought. And same thing here. Why can't this be a bull flag? It can. It's not as clean. And when you look at the weekly, you get this big outside candle, right? Defending the breakout of this channel. So if this, was your balance area, and they broke out of balance, retested balance, and held, that's a very bullish sign. That's not telling me things are going to collapse. And this is the same bull flag thing that we were talking about. At some point, you'll get something like that again. And it's generally after they price in the move and whipsaw everyone out of their positions. And really, that's the previous all-time high. It did it here too. Closed below with a doji, but really just revisited the 40. SMH, buy the dip. Right? When's this going to stop? I have no idea. Has this been going on for a while? Yeah, I think so. Okay? I mean, to say that this looks like, COVID low, like what COVID low? Where is it? There is no COVID low. This is just a series of higher lows and higher highs. Over and over and over. And we are nowhere near breaking that trend. I mean, SMH would have to come down to 248. 248. Yeah, I laugh because it's hilarious. 248. Think about that. The POC's down here at 253, so they would for sure defend that level once. There's a gap fill down here, a rising 200. Tons of potential setups here. Retest of this would give you demand. Retest of this would give you fine buyers. This gap fill. I mean, for them to reverse or break this trend would take forever. But here's the thing. IWM is about to do that. Right? And if you really want to look at this, like, this was the high. I mean, look at that perfect doji on volume. The peak histogram, peak volume, and you've never gotten above since. But keep in the context of this higher low, right? You want to take it from here as the higher low on the monthly? Okay. It's 209.05. So just be clear, break that level, and SPY would have to break 426 for that to align, right? I already gave you SMH. I'll give it to you again. SMH would have to break 248. And the Qs, to break their monthly uptrend, would have to break 350. They're at 400. It's a 20% collapse. So they're nowhere near breaking their monthly uptrend. 20% in most cases. IWM, and really, you could argue broke the uptrend here. Right? Here's your high, here's your low, here's a lower high, here's a lower low. But she did then set a higher high. So that being the case, 209.05 is our level for the monthly higher low. And, 5%. And the way this thing's trading like she's going to be there on Thursday. Give her 4 more days. Right? There is no more demand down here. You can see the bulls are exhausted. The bears are going to start ramping up again. You are in a downtrend. I don't care how you want to label this on an hourly chart. This is becoming painfully obvious. Painfully obvious. I know, right? ABC, right? And then only this part here is 5 waves lower. Okay, whatever, dude. Sure, maybe. It's all subjective. I don't really care. All I can tell you is she's below the POC. basically below every single moving average on every single chart. Less the 200, which is at 170. Look at that, 170. Okay, but my point, really, for bringing up IWM, and we'll bring up IYT, is that both of these charts are not like QQQ, SMH, and SPY. And, one of the tenets of Dow theory and why so many people cover IWM and IYT in general is really simple, that to confirm that you're in a bull market, you need the top 10 and the bottom 10 to both confirm it. You can't just have the top 10 players scoring. Your bottom 10 players need to be in the game scoring too for it to be a bull market. And I know you could say, hey, look, it's SPY. Look, we're in a bull market. Sure. Okay. I could also just say this, right? This thing could remain in a bull market as she's demonstrated, even with a 16% close below SMA 200 on the weekly. 16% below. So that means price could come 41% lower and still technically be in an uptrend. Right? See, people use these moving averages and think, oh, if we're above them, that means we're in an uptrend and I can buy and we're safe. Or if we're below them, it means I can sell and that's the bet. That's not at all how you use the moving averages. The moving averages are a lagging indicator that tell you what has happened, with either an emphasis on the most recent data or not. And when you look at these charts, they're telling you the slope is up on all of these. Sure. It's almost too steep. Almost too steep. I mean, look at this incline here and compare it to what we have here. It's accelerating higher. And the way I want you to think about these moving averages is they're really like the Bollinger Bands. All right? You can draw a certain measure of volatility around them. And what you can do is give yourself what is, on average, the normal range. So if you come look at this and draw bands, instead of around the 20 period moving average, you draw them around to the 40, or you draw them around the 200. You'll find that that really is how you need to look at these trends. And from all metrics, we're overextended on every single time frame. On SPY, on QQQ, on IWM. We're well above all the moving averages and have not come back to visit any of the intermediate term moving averages since June of 2020. And when you look at something like IWM, what has she been doing since June of 2020? 150 to 220, consolidating this move. 40% higher. QQQ and SMH and SPY are just destroying this chart, which is historically been, there's just no other way to look at this. This has historically been a waste of money. That's it. Waste of time, opportunity cost all year. Waste of money, largest corrections. All right, there's just no other way around it. And you look at this chart here. Well, hey, look, we closed below the 40. It doesn't mean anything. The 40's sloping sideways. There's no trend. This stock, this ETF, is under heavy distribution. It's just how it works. And yeah, we have 3 closes now below the 40. This is essentially where the bulls are going to capitulate. There's no other way to look at it. You have one potential bullish setup. This bullish harami, a very, very ugly looking red engulfing or, open at the high, close at the low candle, followed by a large wick all inside, somewhat indecisive look with volume after a downtrend is in fact, technically a harami. The daily has a similar setup, a potential setup of an inverse head and shoulders. We do have the volume tapering off. At the low, we do have the bulls take over and then the volume taper off. But again, I'm not in love with that. I'm not really in love with any look on this chart whatsoever. I can say that this series of uptrends since the low back here, July 19th, has kind of held until most recently they broke this. So there's a lot of damage to this chart. I don't know what else to tell you. I can just say that there's a high probability there's a massive move coming, and you don't want to be on the wrong side of it. I would never bet bear while SPY, QQQ, and SMH look the way they do. But while IWM and IYT look the way they do, I don't see why you can't have a big flat. Come all the way back down here. Also don't see why this can't be a big bull flag, cup and handle, and look for something like this to happen if in fact she can close above 282. That certainly is possible. I mean, the PPOs are saying, hey, definitely take note. That's a possibility. But I don't have that over here. I have the exact opposite. I have no divergences. I have PPO accelerating lower. I have bear volume far outweighing bull volume. I have below all the moving averages on the daily. So this is really the problem. And you can't have the market like this. I know people are going to say, hey, it's like this right now. And what I'm going to tell you is, correct, for a short period of time, the market can remain disconnected. But in reality, if market participants have this much risk-off sentiment, but this much risk-on sentiment, at some point, there will be sellers in Apple. At some point, there will be buyers in IWM. And if that's not the case, if money's not going to be rotating out of Apple and into IWM, into more risky plays, then it's the end of the bull market. And that's fine with me too. I don't really care. This is how it always happens. Go look at the monthly. July of 2007. August of 2018, she topped. She didn't bottom until March of 2020. All right, and then go look at SPY. Here's the same 2018 top, another high, another high. SPY topped in February of 2020. IWM topped in January of 2018. Similar story with the transports. Marginal new high in September, lower high in February and January. Okay, you see what we have here? A high in May, we have a lower high in November. This is what we're going through. This period right here is the same context of what's happening right now. But the reality is IYT looks still today a lot stronger than IWM. And this isn't really what you want. This is a very, very bad look. IWM monthly bear cross, closed below the 10 last month. That is a bearish reversal. Candlestick, if they don't close above 244 this month, it's done. It's over. She's heading for 190, 195, 170, somewhere in that range. Now, there's two things to take note of for the rest of this month. There's not going to be a lot of time left in the year. There just isn't. First thing to take note of is the monthly low from last month. That's 215.88 on IWM. You don't want to see IWM below that at all for the rest of the month. On the weekly, you don't want to see IWM below 212. Below 212 is certainly 209, but more importantly, 203. And what is likely an expanding pattern, something like that. And I know that a lot of people don't really care about IWM. But what ends up happening is IWM is either confirming the move higher in SPY. This move here going back to October. Is this move higher being confirmed? Or is it not being confirmed? Because here's the move higher from October. And we are 100% retrace on IWM. 100%. That's non-confirmation. So while everything looks good in SPY, what this is telling me is IWM is going to go to 170 to 190, while SPY goes all the way back to 420 and corrects this entire move, because this move was not supported by the overall market. Right? This is not confirming the move higher in SPY. This is how I was taught to use this information. This is why I've been covering IWM for years. It's always telling you one of two things. Is there a risk-on appetite, or is there no risk-on appetite? Did the markets top, or did the markets bottom? Without IWM, nothing bottoms. It's that simple. Whatever stock you're watching, if it's in a downtrend, it's likely correlated to IWM. And the same is true with all the darlings in SPY. I mean, here's CRM. Hey, this one just got added to SPY this year. Look at that. Got added to SPY back here in August. All the way back down to the ad price. Actually below the ad price. This is a look above and fail. This is a failed breakout. This isn't by no way, shape, or form the beginning of a bull market. This is the end. This is late stage. Whether it's the end or not is irrelevant. It's late stage. You're not March 2020 lows, let's put our capital at work and just forget about it. You're, hey, going back to February 2016, we're up 500%. And look at the leaders that have been leading. Crowd, 300 to 196. Finally getting that 50% haircut. Net, straight down. Get me out as fast as possible. Lower high in divergence. This was your 3. This was your 4. Here's your 5. Dead. Done. Put a knife in her. She's freaking toast. I'm not touching this stock. All the leaders like ASAN, 50% haircut. SE, boom, breaking below channel on volume. Just done. C'est la vie. Risk off. ARK, might as well end on ARK and Bitcoin. All those buyers, still below a declining EMA 5. Huge what appeared to be an impulse move higher. Overlapping structure 103.58, 103.92. So this overlaps here. So we are correcting this move. No doubt about that. This is a corrective move higher. And can be an impulse only when we break above this high. For sure. This might be wave 1, 2, which would set up something like this. Looking for minimum 1618 if this is an impulse for wave 3, if not higher. This is what happens every time, though. Everyone sees the low, they get all excited, look at all the volume that flooded in for 3 days, and then they just turn the faucet off. They stop buying. And all the Johnny-come-latelys that piled in here and here that have no conviction in the trade sold the very next day. They bought the top, they sold the low. They're convinced it's still in a downtrend, and it might be. You know, but take a look at this. Isn't she just backtesting this channel? Yeah. I mean, definitely possible. And if you put up a fib here, what type of retrace are we looking at? We've had the 50% retrace of that move. Beautiful. So it could go either way. And I'm telling you right now, when you get all this volume that floods in, it floods in at these major pivot lows. Just look. Okay, every time it floods in, that's when they pivot back higher and keep moving. Now I will say, below 93.89, and you've got yourself a problem. That's the fib level .618 extension of wave AB that we are watching. And until we get any type of close above that, a close below that, I'm sorry, there's no reason to panic. I took a position in this. Here's another one I'm watching. PayPal. All right, we got the histogram positive above this histogram high here and above this high here. So the last two dead cat bounces, which were both ABC up in nature, we've exceeded. And look at the thrust you had here. I mean, you certainly have the moving averages now right where they need to be on the short-term time frame. They've tested, been confirmed. You do have what looks like an inverse head and shoulders coming out here, and a gap down here at 184.81. Stay above that gap. No reason to get out of this trade. Close below 179. She's going to 173. So it's one of those, you know, where I added at 191. I'm going to exit below 185, 184.81. This gap fill. If that happens, I'm out. If that doesn't happen, I'm staying in. And by the way, if I exit, I'm looking to buy back at 173. It's not like I'm out and the trade's over and that's the end of it. No, I'm just going to be active and protect my capital. Again, looking at where the markets are, this isn't a place to just buy blindly and let your capital work. It's a place to selectively allocate into certain names. And I'll show you one more name I like. This is ENPH. By the way, I like IYT a lot. Transports, I do still like. We do have this nice big cup and handle look. We do have a clear impulse higher, clear ABC, which retraced, you got it, 61.8% of wave one. You now have another obvious ABC up. And now an obvious impulse up, and now another ABC down. Look at that. This time corrected 50%. I'm not convinced that this is done. We could break this low, but the invalidation for this structure is 201.50, and I'm in as long as we're above 201.50. We go below that, and I will certainly exit this position and take the small loss. I nailed the low here at 210. So at 210, my risk for this trade is 4% on 15% of total portfolio. So really small haircut. If I'm wrong, I'm happy to take those types of trades. And if you look at the risk of 4%, what's the potential reward? At minimum, this gap fill, a retest of the all-time highs. That's what happened. Like, this is what stocks do. And I know it's hard for people to get, but they come, they set a new high, they pull back. They set a new high, they pull back. And the best stocks just keep doing that. And the worst stocks just keep doing the opposite. So this one's already broke the the March lows. What's the AT&T ticker? So did AT&T. I think it's T maybe? Yeah. Boom. Look at how this one's just falling apart. Broke the March lows. I mean, look at this. This is massive distribution. The bull market for AT&T ended in 2000, and it never came back. Never came back. And there's lots of names like this in real companies that provide real services. This isn't just, a meme stock dumpster fire. This is a dumpster fire of all the stocks in the market except QQQ and SMH. And when you look at this, and in EMPA, like the select names that are in the S&P 500 that are leading higher, EMPH, Shopify, these names have been leading higher for 10 to 12 years. But I mean, look at this Q monthly. In what way is this not extended? And it doesn't mean it can't keep going. What, this is a running flat here? Okay. ABC, fair. This is still wave 5. Now, I love to do these types of symmetrical moves. QQQ could be going to 700. So, I'm not shorting this. I'm not hopping up here to sell at 400 to buy back at 380. You just buy the dip. And the steeper the dip, just zoom out. They're correcting on the weekly, not the daily. Sorry. Every pullback into the 10 and the 20 is bought. Over and over and over again. And when you close below the 20, get out and wait for the steeper corrections. But yeah, that's where I'm at. I hope I didn't go a little too long in the tooth here. We're at about 32 minutes. I just want to point out that there are opportunities. And just because the stock market is killing small caps doesn't mean that there is nothing to play, right? There's still plenty of names to play. But what it does mean is that what is more likely than not is that the moves higher in SMH, in SPY, and in QQQ going back to October are at risk, while IWM and IYT fail to confirm the moves higher. And if you do the spread analysis, which I'll do in another video, you can see that the spread between QQQ and IWM has continued to widen since the peak in March. You're going back 9 months of selling crap to buy good. And that's normal. That rotation happens. That's perfectly healthy. But what happens at the end of the bull market is they never rotate back into the crap. And all the money just stays at the top 5 or 10, until there's no one left to buy those, and then they start selling them as well. And if the sentiment is right when they sell their Apples and Qs, then they look to find the next opportunity. And they're not going to go to the stocks that have been up, for 4 years straight. The CrowdStrikes, the Nets, the Nvidias. They're going to go look in the IYTs, the IWMs, the AT&Ts, these stocks that have been beaten up for years. The Dow, etc. There's a lot of names that aren't performing at market. And either those names are the opportunity, which they may be, or we're at a major market top. And we just won't know for some time, unfortunately. And I do want to point out before I end this video that we did have 2 80% back-to-back up days this week in SPY. We also had the number of stocks above their 50-day moving average go below 25% and then recapture that level. That is a very bullish sign. We've had the extreme pessimism in the put-call ratio going as high as 1.16. So there's a lot of things that are leaning towards expect a rally. But until we see IWM and IYT confirm that, the assumption is sell all rips and buy into the names that have the potential for one more impulse higher. ENPH, the DHR, the Shopifys, and avoid the IYTs and the IWMs until they bottom. And then when they bottom, they will be the next best swing trade setup. And it just has to happen, I think, in line with IWM, which is waiting on XLF. And I can't believe I didn't cover XLF, so I'll go through it here real quick. Recaptured the 20 after close below on volume. Very, very bullish. Still below the 10, though. I do love the structure of this ascending triangle. It's exactly what you had on the weekly here. It's exactly what you had with SMH, by the way. It's this exact same setup. Okay, and we're right here, if you can't tell. Right, we're right here. Waiting for the 40 tag. That 40 tag happened. They couldn't get to it. That's how bullish this is. All right, what happened after SMH tagged the 40? She went straight up for 8 weeks. So I think that's where we are with XLF. If that is where we are with XLF, then it will drag up IWM, and this will play catch up, as it always does. Money will rotate out of the queues and back into the bottom 10. And that's it. If you like the content, hit the subscribe button, hit the like, share the video. Come check us out on Twitter, and we'll see you in the next video.